All right. What is going on, everybody? Jonathan Farrell with the Two Mortgage Guys, and we're coming back to you with Quarantine Chronicles, and I got Miss Tiffany Cross on with us today. How are you, Tiffany?
I'm doing great. How are you?
I'm doing fantastic. Life in quarantine has been so much fun, and it's I know it's been for you as well.
Uh-huh.
Yeah, I'm super excited to talk with you because we got a lot of different things to talk about. You know, for those of you who don't know, Tiffany is with an amazing company, the owner of an amazing company, local to us, but also statewide known nationally, and that's Dedicated Credit Repair, and one of my biggest power partners. I appreciate you taking the time to jump on.
Thank you for having me.
So, you know, the one thing that I really wanted to talk to you about is, you know, especially with everything going on with the COVID-19 crisis, you know, obviously that there's a lot of different guidelines and a lot of different things that have kind of come out that have been, you know, that people have questions on, especially how is this going to affect my credit? How is this going to affect, you know, the mortgage industry in the future? So, you know, again, I'm really glad that you're on with us to talk about that. Before we started recording, we were just kind of running through everything as far as on your end. And if you don't mind just kind of telling us what's going on with the credit bureaus, because I thought that was really interesting that you just said.
Yeah, absolutely. So we were kind of chatting a little bit about how, you know, just the recent statistic is that a third of all Americans are, you know, late or not making their mortgage payments, which we can circle back around on. But what's happening, of course, is we're just carefully monitoring the response times of the credit bureaus, because prior to March, of course, we still had clients in our program disputing things off of their credit so that they could be qualified. At the time, it was all about the hot refi market. And so we have a ton of clients in dispute right now with various items on their credit report. And as you may or may not know, the FCRA, which is the Fair Credit Reporting Act, only allows the credit bureaus 30 business days to do their due diligence, reach out to the original creditors, and of course verify that the accuracy of the information being reported is 100%. So there can be no information that's partial or incomplete, et cetera, but they do have to abide by that 30-day time period. So we're just seeing that the credit bureaus are super inundated right now. We expected this to happen, of course, but they're not abiding by the 30-day response time that's allowed per the law. So we're seeing an increase in deletions of derogatory information, which is super hopeful, giving everybody a lot of hope right now, right, during this crazy time, for sure.
Yeah, and again, you know, if just to kind of give your business a little bit of a plug right now, if you are ever thinking about doing something with credit repair, now would be the time to do that, right? Yeah. Because especially with everything going on, it's going to be that much easier for you guys to go in there and remove basically all these different derogatories that people might have, right?
Absolutely. So, you know, at the end of the day, we've got consumers that have been disputing on their own. This is not the time for, do-it-yourself credit repair at all. When you're disputing, you know, what essentially is happening, and we're seeing a trend, of course, is that the credit bureaus are just not complying. They're just not responding. And to the layman who doesn't know what they're doing, they're like, oh, TransUnion didn't respond to me this month. Well, that's not okay. So, the consumer has the right to be responded. Frankly, they have to. They're supposed to be penalized with a pretty hefty fine if they don't respond in the same format, by the way, in which you've disputed. So that's why you never want to dispute negative items online. You want to do it in writing. And that's what we specialize in. So when they're in violation of the FCRA, then, that's where we're really in the driver's seat. And that's what we're specializing in, is just enforcing the law and making certain that the item is deleted if they're not responsive in that 30-day period.
Good. No, yeah. So, I mean, that's huge for people, especially with everything going on. I know, and can you kind of go over like the different rules? And I know that there's a couple of laws and everything that just kind of came out that's basically stating like, any 30-day lates will not be reported on like a client's credit because of, everything going on right now. I know a lot of people are talking about forbearance and what that's potentially going to do. But, I know that there's some other laws that have kind of come out to protect everybody as everything has been going on.
Yes. So the big word on the street and the phrase everyone's using is the CARES Act. And the CARES Act was put in place. Actually, I think it's phenomenal. It's what's different. It is the only thing that appears to be what's different between 2010, for example, and now. Because a lot of times back in 2010, people were in those lawn modifications. A lot of the banks were actually soliciting the homeowner without the homeowner even calling the banks. They were sending things in the mail saying, hey, let's go we're offering you a decreased mortgage with the idea to keep people from going into foreclosure. But then consumers were making those modified loan payments and getting 30-day lates on their credit profile because it wasn't the amount of the original loan and they hadn't refinanced out of that note. So now with everything going on, supposedly the mortgage companies, B of A, some of the larger ones have put in writing that a consumer has one of three options depending on who's servicing the loan, who owns the loan. We've seen anything from 90-day forbearance. We've seen banks offer, to end it, to put up the missed payments or the 90 days worth of payments on the back end of the loan. But the question is, how is that going to affect your credit? So in the CARES Act, there's a stipulation that if there is an agreed upon in writing forbearance or any sort of modification to your loan, they're not supposed to be putting 30-day lates on your credit profile. So right now, more than ever, you need to be monitoring your credit almost daily. I love LifeLock. Any of those are good. But be monitoring to make certain that they're not in violation by putting a 30-day late. But just be alert to the fact that sometimes just no payment at all will drop your scores. Because if you've been paying every single month, 30 days, every 30 days, you're making that mortgage payment. Now suddenly you have no payment recorded at all for 90 days. We're seeing, a 40, 50 point hit by just simply not having that credit history reported. So it's not just the fact that the 30-day late shouldn't be placed on there. You've got to be careful because if you miss a payment, could still affect your score just from the lack of payment at all being reported.
Right. Yeah. And I will say one other thing too, because, of course, there's the difference between like the credit side and then, of course, with the economy side, the banks, somebody is ultimately going to have to make that payment, so the bank is basically, if they do talk to you about the possibility of forbearance, they are agreeing to make that payment on your behalf. So it's not like you're going to be missing payments. It's either getting, I've seen a couple clients come back to me and say, hey, I was talking with my bank about forbearance, but I'm going to owe 3 months payments at the end of this. And so, definitely if you are, and I will say, just kind of giving a little bit of a plug here too, in regards to forbearance, if you have the ability to make your mortgage payment, you should make your mortgage payment.
Yes.
If you do not have the ability to make your mortgage payment, that is when you should be discussing the possibility of forbearance. I just had a self-employed borrower whose business is shut down. They literally are, had to lay everybody off. He's like the good potential person. It's like, hey, I physically have no income coming in. I have to be moving. I'm talking with the SBA to get the new SBA loan and everything else, or the potential grant. But I have no money coming in. That is somebody who would be a good qualifier for forbearance. Not somebody who's salaried, who's just like, oh, I can skip a couple months of payments. Like that's not what this is. That's not what this is for. It is for the people who literally cannot making their payments because their business is shut down, they've been laid off, that sort of thing. So, in order for basically the economy to be moving forward, if you have the ability to make your monthly payment, continue to make your monthly payment. If you physically do not have the ability to make that monthly payment, that's when we wanted to go and talk about, okay, now let's go and talk with your servicing bank pertaining to obtaining a forbearance, But again, the other thing too is read the fine print, because some of them will allow for you to stack it at the end of it. Some of them will say, okay, you're going to owe us 3 months payments at the end of the 90 days. So just be careful with that as well. So
yes, absolutely. And I want to add to that the fact that sometimes, and I posted this on our dedicated credit repair Facebook page, which by the way, another plug, if you can just like our page, we're giving literally hour by hour updates on the credit industry and things that we're seeing. But I do want to mention that we've had multiple clients now contact their servicer just to ask questions regarding the forbearance. Our particular client was or is a hairdresser, of course, not able to work right now, not able to see clients. So she called. Her husband's a firefighter. He's still working. So it was more just a call about, hey, by the way, what are our options? And in that phone call, whoever took the call put the comment or put the information in the system, forbearance. So it appeared on her LifeLock account. Actually, the words forbearance appeared on her credit profile, even though they never opted in to participate in the program. And she dropped 38 points. So I want to kind of just mention that there's a lot of different layers to this, kind of like a little onion here. So it's not just score, it's not always a score consequence that we're worried about, although that's one of the things we think about. Sometimes just the commentary or the words forbearance or loan modification a lot of times when you see that happen, you can, a lot of times people will go in underwriting, and the underwriting will be a difficult situation because they'll treat it as if the client actually went through a foreclosure or through a loan modification. So we've got to be really conscientious right now to make certain that if they put anything like that, even though there may not be a score consequence, it could affect your ability to refinance or purchase. So we got to make sure we get all of that, all the verbiage off the report.
Right. And so this actually just happened to one of our clients who, right before he contacted us for a refinance, he had contacted the servicing bank because he is self-employed, but however, he is an essential business. So he had just contacted them to see like what the parameters were for any potential forbearance should his company no longer be considered an essential business. And they did put those marks on his credit report. So when we pulled it for refinance, it says loan is in forbearance, even though he is paying that mortgage. So for us, now we can no longer do anything or even start a refinance because of what that verbiage that's on his credit report. So, again,
huge trend. That's something we would want to
phone call. Yeah.
Mm-hmm.
So,
yeah. So, and then the other thing too, is we're also seeing, unfortunately, clients who are not making missing payments, who are saying, okay, this is kind of scary times. I'm going to take advantage of getting my tax refund, sometimes the stimulus, but mostly it's the tax refund. People are saying, I'm going to pay off my credit cards. Now's the time I want to go debt free. And although that is an excellent thing to do in the normal, environment of our economy, right now I'm discouraging, believe it or not, clients to pay off their credit cards. I'm encouraging you to do gentle pay down strategies where maybe you apply 5% extra to your principal balance and then maybe 10% the following month. Because credit card companies in and of themselves are seeing the writing on the wall, and they're actually decreasing limits and closing accounts on people just to get the risk off their books. So I have clients that are in good standing, perhaps. And Capital One, we're seeing that a lot actually with Capital One, where they're actually canceling cards or they're canceling people. They're accepting their payment payoff in full and then they're closing the accounts. So that affects 30% of your FICO score in and of itself.
Right. So, and that was my next question was going to be, how is consumer credit, as far as like the credit cards and everything else, kind of been impacted? I know, and I did want to ask too, because what if a potential client does not have the ability to make a credit card payment at that time? Does that, like, I know that, CARES, I always read, part of the mortgage credit, not necessarily like the consumer credit, but how does that impact somebody who's, can't make their regular credit card payments because of everything going on right now?
So 1 30-day late affects the score 60 to 80 points. Mm-hmm. And I think the misconception out there is that, well, I'm going to be late on my Old Navy card or my Victoria's Secret card because it's less substantial than my mortgage. So you've got to look and understand that the FICO score makes no discernment between the different types of late payments. If you're late, you're going to drop 60 to 80 points no matter what it is.
Huge.
Where that's important, though, is your mortgage underwriting, as you know. So obviously, a mortgage late versus a 30-day late on an Old Navy would definitely impact a little differently in the underwriting stages of approval. But, I'm encouraging my clients to do a couple things. Obviously, call, ask for extensions if possible. But, a lot of times what we're suggesting people do is just doing balance transfers. If you are a business owner, there are a ton of amazing loan programs right now at 0% interest for SBA loans, just different things to kind of carry you. There are areas that you can cut spending over the next 90 days. I never encourage anyone to ever skip any type of payment. But, sometimes you have to make choices. And unfortunately, those hard choices have to be, something's got to get cut, right? So utilities, insurance, it's calling insurance companies and decreasing limits right now. Being late on utilities will not affect your FICO score. It will affect your FICO score if it's like a cell phone contract and it's broken, but missing, 60 to 90 days on a bunch of your utilities is not going to affect the score. So sometimes that's kind of a smarter way to go rather than missing a payment on a credit card.
Right. Especially if the payment's, minimum of $20,
and the downside is, I think people think, well, if I make $20 payment, if I owe $100, and I at least make $20, it's not going to affect my score. And the truth is, if you don't pay the entire amount owed, you will get a 30-day late. So a partial payment will not keep you from getting a 30-day late, which a lot of people aren't aware of.
Yeah. And, again, the biggest part of this podcast and why I'm glad that I have you on is more for that education aspect, because a lot of people don't know, how this could potentially affect them whatsoever. So I mean, the biggest thing is getting someone like you in front of on a platform in front of a ton of people. That way that we can educate as much as possible. And ultimately, again, that's why I love having you as one of my power partners, because I know what you do and who you are, and why you take a lot of the how you go about educating as many people as possible with what can impact their credit. So I really appreciate that, Tiffany, too.
Thank you. Thank you. And just to kind of tell you, I mean, at the end of the day, all these facts can be super overwhelming. I'm okay, 60 to 80 points if I'm late on this. And, I'm going to get comments put on my credit report if I do these things. I mean, obviously it's important to know the consequences, but what's even more important is to know the solution. And that's really what I appreciate you offering this, is there's solutions to this. And that's where, it's important that we all be educated on the facts, and the sky seems to be falling a little bit. But when we stay focused on that, it can be super overwhelming. And so what I like to do is partner with you also, because offering the solution-based type thinking is what's going to get people through the anxiety of what's going on right now.
Right. Especially because, I mean, now is completely unprecedented. It's not like this is, regular occurrence. I mean, this could be the new normal for a little while. So it's important that everybody knows the facts and how to go about, combating certain things. So, again, the mortgage industry right now is strong. As far as like people refinancing, people purchasing, I mean, loans are still going through. There's been a lot of talks about how so forbearance is going to impact pricing. Basically, forbearance, if you don't continue to make that mortgage payment, it's going to drive up the interest rates. It's going to drive up and actually harm banks from basically allowing for certain products to be extended. I mean, we've already seen the jumbo programs evaporate. We've already seen most of our down payment assistance programs gone like this. So as far as everything else is concerned, the new normal is going to be. This is going to be the new normal for a little bit, but ultimately we are expecting for it to make its comeback. It's just going to be a matter of time, and we, as the consumer, also have to do our part. It's not just allowing for somebody to, we can't just say, okay, yeah, this month I'm going to skip it just because, I can. Ultimately, that does, like, if everybody's doing that, that's going to impact the whole economy as a whole. I was listening to Russell Brunson's podcast, and, after 9/11, the government was telling everybody, like, hey, like, let's go stimulate our economy. The economy shut down for a while after the tragic events, and they're like, hey, no, let's go, time to start spending money. We got to stimulate our economy again. And ultimately that's what's going to have to happen here as well. The stimulus check is specifically to help a lot of people, but again, we got to be stimulating our economy. We got to be helping our small businesses. We got to be helping the banks out as well, because the banks are going to be taking on a lot of the brunt force with all this possible forbearance. Ultimately, if you're not able to make that payment, somebody has to make that payment. So the bank is going to be the one making that payment. So again, we want to make sure that we can continue to help keep our economy afloat by doing what we need to be doing as consumers. So just my little plug for that there. But ultimately, we need to keep it all going. So
we do, and I think we have to take. This is probably the second or third time in my adult life where I literally woke up and my reality was completely not the same the next morning. I mean, I think there's some comfort in us always thinking tomorrow is going to be identical to yesterday. But if there's one thing we can take out of this, is that, the whole idea of saving for a rainy day, it's not a matter of, if there's going to be a rainy day, it's just when. And I think our economy just in general, just our general society, is that we spend, and we don't plan. And so, without, going too far into that, I think one of the biggest gifts we can give our clients is just the tools to learn how to take this and learn. We're working with our clients on budgeting and learning on, that you have saving is critical. And really that's where, yes, credit is important, but budgeting and finances are super important too, because you never know, bad things happen to really good people. That's our motto. And divorce happens, catastrophic illnesses happen. We're in California, so the chances of us having a ginormous earthquake one of these days is super possible. I mean, you never know what that's going to be. So if we can do anything for our clients, not only do we want to remove things from credit, but I think it's super important right now that we take some financial coaching to heart and start planning for these rainy days.
Absolutely. Yeah, we definitely need to, and again, it's, I mean, the whole situation, when you take a look at it, our world is flipped upside down. We went from a society that's, basically moving away from pain. We're buying items for pleasure, and now we're buying items to, I mix it up, but we moved from a society that was purchasing items for pleasure to now we're purchasing items to, keep away from pain. And, ultimately that needs to, the world is shifting in that respect. I do think that it was kind of already shifting that way, especially with everything going on, but, this just kind of expedited everything. And so as far as that's concerned, again, it's going to be a couple months before things return to normal, but I do think that it's going to be a new normal for sure. So
absolutely. I couldn't agree more.
So, well, anyway, I appreciate you coming on. I'm glad we got to hang out and talk face to face. It's different via phone call or even in person. But I was laughing at what you had told me too, because like you said, I love Zoom, and you said I love Zoom, and I was like, yeah, I do too, because literally I can just jump on, boom, we're there, we're in a meeting, and I don't even have to leave my chair. I don't have to go anywhere.
I love it too. I feel like you can meet with 20 people in a day versus driving from, one end of the other. So
half the time you spend driving. So
yeah.
But so you can even see, like, there's so many other business opportunities that are just going to come out of this. Like, everybody used Zoom in one way or another before, but now I do think like everything is going to be moving more towards like, okay, here we are virtual, like we're virtually meeting everywhere. Everyone's posting too on Facebook. If you've seen that, like they're playing poker, but they're playing poker and then using Zoom. Like, so, I mean, I set up I don't know if you've ever heard of Jackbox, but it's a game, like an internet-based game. So I Zoomed my whole family in. So we're all looking at I have like one computer pointing towards the TV and then one computer pointing towards us. And then everybody's connected through their phone. So it was really cool. We had a virtual, family game night. So that was really cool. But
that's fun. My neighbor plays a professional cornhole, and he's got his set up outside. So they're literally playing cornhole via Zoom. So
really, that's cool.
Pretty impressive.
Yeah, I mean, there's going to be a whole bunch of stuff that's going to be coming from this. But again, I really appreciate you coming on.
Thank you very much.
This was really good information. I think that this is something that a lot of people can benefit from. So again, thank you so much for everything that you do for all of my clients. And
thank you.
I appreciate you coming on, Tiffany. Thank you.
Thank you so much. I appreciate it.